Welcome to Shreyansh Academy. This is Professor Meenal Udeshi Dedia. In this video, I would be covering one of the basic topic on which IND AS are based on, that is fair value accounting. Let us start. Fair value accounting. Tell me, was accounting standard ever using fair value accounting? Yes. When? Can I say accounting standard 2, your favorite? Inventory. Inventories were valued at cost or NRV, whichever is lower. AS 13 investments. Current investments were valued at lower of cost or fair value, and your long-term investments were valued at cost. However, if in long-term investment there is a reduction which is other than temporary, then even they were valued at fair value. AS 10 property, plant and equipment. They were revalued. Can I say they were using fair value? AS 14 amalgamation. When the assets were acquired, can I say you were using fair value? So we can't say that AS was completely reluctant towards fair value accounting. It was using it, but only sometimes. So accounting standard was majorly using cost model. But IND AS is different. IND AS has to say, if you want to show reality, true and fair view, then you should value things at fair value. So what problem AS had? AS was based on one of the principle called as conservatism. Now question arises, what is conservatism? Anticipated profit is to be ignored, that is not recorded, but anticipated losses are to be recorded. Anticipated profit not recorded. Why? Because of two major reasons. What were those reasons? First, you are building an expectation for shareholders, which if you can't fulfill, they would be unhappy, and if they are unhappy, they will react in the share market. But ma'am, if I record anticipated profit, I am inflating today's profit. No, that is the problem. That's not a solution. That's a problem. Because your current year's profit is high. What is the problem if my current year profits are high? My share market will react in positive manner, no? Yes. But if your current year profit is high, can I say your shareholder can ask for a dividend? And if you distribute dividend on these profits, so you are distributing a dividend on the profit which you have not even earned. And what if you don't earn it in the future? Oh, so AS said don't record anticipated profit. But IND AS is different. IND AS is saying that if you have a problem, find a solution. Don't cut off the problem itself. If you have a problem with anticipated profit being recorded in P&L, then find a solution. Record it separately. Okay, we can record it separately. So we can name it something else. Like, can we name it as other income? No. Why? Can I say because that name is already used for interest income, dividend income, etc. So IND AS had to say, in your P&L, that is statement of P&L, you will have two sections. One is your profit or loss, another is OCI, other comprehensive income, the total of which would be total comprehensive income. And IND AS said, if you want to record anticipated profit, do record it, but not in PRL, but in OCI. You will distribute dividends from your PRL only. Can I say, so your anticipated profit is also recorded and you don't have to give dividends also. So now your asset would be at fair value. Let us understand this by taking an example. If I say on 1st January, I purchased some investments at rupees 1 lakh. On 31st of March, the fair market value of these investment was rupees 1,80,000. And on 5th April, you finally decide to sell these investments and I am selling it at rupees 1 lakh again. Now let us see how will accounting standard deal with it. As per accounting standard, can I say on 1st January, first I will pass an acquisition in. So investments, account debit to cash or bank, 1 lakh, 1 lakh. On 31st of March, when the price becomes 1,80,000, so what? Can I say it's an anticipated profit? I'll value at 1 lakh or 180, whichever is lower, that is 1 lakh. I won't record that anticipated profit. On 5th of April, when I sell these investments, can I say cash is coming in 1 lakh to investments 1 lakh? Simple, no profit, no loss. But let us see what IND AS has to say. On 1st January, acquisition entry correct. Investment to cash or bank 1 lakh, 1 lakh. On 31st of March, tell me, will you value those investment at 1 lakh only, that is cost, or you will bring them at the fair value? Fair value. So I will increase my investments by 80,000 and I will transfer this profit to OCI. Understood? Then when I finally sell these investments, can I say cash bank account debit is 1 lakh? But my investment is credited by 1 lakh 80. Why? Because my investment has a balance of 180. So ma'am, what happens to the loss? The loss will be transferred to PRL account. Because this is not an anticipated loss, it's an actual loss. Can I say your actual loss should go to PRL? Clear? So ma'am, what happens to this OCI? So now understand. OCI can be of two types. One, reclassifiable. Other is non-reclassifiable. Reclassifiable, as of now you can understand, is used for ordinary business. Means, reclassifiable basically means your OCI balance will be transferred to PRL account. And non-reclassifiable means it will not be reclassified to PRL. Then it will directly go to your equity, that is reserves and surplus. In reclassifiable, there is no impact on total comprehensive income. Why? Because you are deducting from OCI and adding to PRL. But in non-reclassifiable, can I say TCI would be affected? Your total comprehensive income would be affected. Let us understand this. In the same example, if I say those investments were OCIR, the profit was OCIR, then can I say at the end, your OCI balance will be transferred to PRL. So can I say OCIR account debit to PRL? 0.8 lakhs, 0.8. If you see the final impact, can I say PNL cut? That means no profit, no loss, which is exactly like AS. But this is just giving you true and fair view. Now when I teach this, there are n number of questions in your head. Like question number 1. Are all fair value change recorded in OCI? No. Why? Every IND AS will specify. So that's the job of every IND AS. They will tell you whether the profit will go to OCI or PRL. Like for example, if I have profit or loss on sale of property, plant and equipment, can I say sold? Then the profit or loss will be transferred to PRL account. But if I say that I have profit or loss on revaluation, then it will be transferred to OCI part of P&L account. But if I say there is a profit on net assets in amalgamation, now I will call it as business combination, then it will go to reserves directly. So every IND AS, who specified this? IND AS 16 of property, plant and equipment. So every IND AS will particularly specify where will the profit go, whether to OCI or directly to reserves or PRL. Query number 2. How will you value your fair value? You need not worry about it. We have a whole IND AS on that. IND AS 113, which is only talking about how to calculate the fair value. Query number 3. Will IND AS never follow conservatism? No. IND AS will sometime follow conservatism, like in IND AS 2. We will still value our finished goods inventory at cost or NRV, whichever is lower. So this was regarding fair value accounting. I hope you have understood. Please subscribe to our channel to get more information about IND AS. Thank you.